Inox Wind is in focus because they've bagged yet another order and a large one at that. Devansh Jain Johnson to put not just that order, but maybe the calendar year in perspective and what to expect in calendar year 24. Devansh, good having you. Thanks so much for joining in and congratulations on the order. I heard some conversations that you had with some of the sell-side brokerage houses in the last few days, and it seems that the spate of order flows that you were talking about, safe to assume that has started?
Thank you for having me. It's a pleasure to be on your show. Yes, God willing, things have started panning out, and I think the recent 280 megawatt order hopefully is just the beginning of a spate of order inflows which we expect to announce in the coming days and months.
Coming days and months. Okay. So, Devansh, maybe there is a bit of a, how do I say it, delay relative to what the market anticipated you to start pronouncing orders. But would you believe that, one, the order inflow internal assessment that you may have had for FY24 still remains as it was, say, maybe 3 to 6 months ago?
Look, frankly speaking, I don't know. I mean, you know, there are certain expectations which XYZ people may have. I mean, putting that aside, I think internally we were very, very clear. I think we were very focused on, you know, fixing the balance sheet, getting the supply chain in, getting the whole management team in position to gear up for the huge ramp up. And I think within that, if you see, we've not announced small orders of 2, 10, 50, 100 megawatts. If you see the order we've just announced is 280 megawatts. So frankly speaking, people may have expected, you know, we'll do 100, 100, 100 or 50, 50, like some of our competitors may have done. This is a mega order. I mean, it's in excess of 2,200 crores in terms of just the supply side. And then the O&M revenues over the lifetime of the contract would be in hundreds of crores. So it's frankly a mega order. And having said that, I think, as I said, we expect a huge amount of order inflows over the next couple of days and months. What was also important for us, don't forget, was, you know, we had to get the terms and conditions right. So initially we were very focused on the PSU orders, and then we shifted focus on equipment supply, IPP, C&I. We also had to get our 3 megawatt production started, some of the certification sorted out. I think as soon as our base work got ready, you know, the management team, the supply chain, our certification, I think it's from there on that we started moving on. And I think given whatever estimates there may be in the market, God willing, I think we should be much larger than that in FY25 and 26. In fact, the current order itself gives us a very, very substantial visibility in terms of revenue for FY25. And God willing, by the time we exit March 24, we should have covered a big chunk of FY26 as well.
Got it. So what is the current order book and what is the composition thereof?
So as of 30th September, our order book was 1,276 megawatts. I think with this 280 megawatts of orders, it goes up to about 1,500 odd megawatts. About, I would say 33% of that is with public sector enterprises. And I would say about 50% of the order book is broadly with C&I and IPPs. And maybe about 10 to 15% is with smaller retail captive consumers.
Got it. And this large number now keeps you in good stead for executing, say, circa 350 odd megawatts in the balance of, in the second half of FY24 and maybe 600 odd megawatts for FY25, because I'm presuming that was what the earlier guidance was, if my memory serves me right.
I think so. I think, God willing, we should be far stronger in FY25 and 26. We're not updating any of our guidances at this point in time, but once we get into, you know, once we get done with Q3 and we're in Q4 of this financial year, we may look at upping guidance for FY25 and 26. I think with respect to the current period, I think we're well on track with respect to some of the financial guidances we've shared with the markets.
Got it. So 500 megawatt for FY24 is a given. You may up the guidance for FY25. I don't want to force you into kind of doing that right now. Is that a fair assessment?
That's right. That's right.
Okay, great. Have you started the 3.3 megawatt turbine supply already? And is it showing promise in terms of how much it improves internals? I know it's early days, but are you happy with what's happening, if it is happening right now?
No, yes, we did commit that we'll start production and supplies from quarter 3, and I think yes, 3 megawatt production has started. It's going on as we speak. We have multiple molds which have come in to our plants, so blade production starts as well. I think we're well on track, and I think with respect to the current order obviously is very large, and we've had a couple of other orders from NTPC and a couple of other private sector enterprises, and I think with the kind of inflow discussion going on and our pricing and costing, I think we're very, very confident with respect to achieving the guidances we've set out in the public domain.
Got it. Sorry, just a follow-up. I forgot. I wanted to give a follow-up to the previous question, Devansh. And this current consolidated order book, does it include that 500 megawatt order from a large Indian corporate? The LOI was there, but I don't know if it went beyond that. So just some clarification there.
No, so that continues to remain an LOI in the balance sheet. The current order is from a different private sector enterprise, but
yeah,
I think we've done a lot of work with that other corporate client with whom we have an LOI. So as we move forward, we'll figure out how we take those LOIs and other things forward.
Okay, so 1500 includes that 500 megawatt of the LOI as well, but independent of that, there is 1000 megawatts of orders in place as is.
That's right. That's right.
It.
So we've got firm orders of almost 1000 megawatts and 500 odd megawatts of LOIs currently.
Got it. Okay. And I heard you say that you will probably move beyond that as well. Just one quick question. I know you may not want to talk about it, but I think in one of the conversations that I heard you having, like I said, with some brokerages, you were talking about working on another platform beyond the 3.3 gigs as well. I mean, any timelines that you're setting out for the same? Because I presume that takes you into yet another orbit, which is a notch higher.
Look, I think as an organization, we are preparing ourselves for the next 10 years. So, as I said, we've got our supply chain in place. We've got a very, very strong new management team in place. We've been building that over the past 12 months. We've fixed the balance sheet. We've raised a lot of capital. We've cleaned up the 6 years of pain which the sector went through. And I think looking at how the sector keeps moving forward, obviously I can't share specifics, but yes, we are working on another much larger platform. Having said that, I personally believe the 3 megawatt platform is going to be the mainstay for the next couple of years, simply because from a logistics perspective, you can't move larger blades, barring 1 or 2 states or very few sites. You can't move much larger blades. Our current 3.3 megawatt platform, the rotor diameter is almost 146 meters, and we've already got larger blades available for that platform. So while we're working on a larger multi-megawatt platform, but I think that would be a very, very limited scope, which would be usable only in select places. But yes, we are working on something, and we'll announce that to the markets once we're ready to talk about it.
Got it. You've spoken, I mean, it's a sweet space to be in, because you've spoken that now you're choosing customers that you want to work with, a far cry from what the sector's state of health was, say, back in 2016, 17 or thereabouts. So I'm guessing it's a sweet spot wherein you have to choose the customers, the kind of order wins that you're getting as well, and the order flow that you have. I hear you say that you're probably expecting some more significant order wins in the next 4 or in the next 3 months as well, which may prompt you to up the guidance. The question, Devansh, is execution going to be a challenge, or do you believe that the pace of execution and the quality of execution could match the pace of order inflows that are coming into the sector and to you in particular?
Look, first and foremost, I don't mean to sound arrogant, but it's not a question of choosing customers, right? I think just to set that right, I think the past 6 years, the sector's been through hell. We've had more than 30 players go bust. They're probably just 2 domestic players who've survived, and maybe 1 or 2 other foreign players who are of any serious relevance in the Indian context. And I think, at least at Inox, we never had the luxury of haircuts and not paying vendors and creditors. We've paid off every single rupee across the system. And I think to that extent, we are very, very careful with the kind of people we want to work with, the terms and conditions we want to work with. We don't want to work with people who are really bad paymasters, who are always looking at opportunities to, put damages, liquidated damages, not pay up on time, make excuses. It's an infrastructure project. There will be ups and downs. There could be challenges which you need to cope with. And I think to that extent, you need people who have a partnership kind of mind space when we work together in terms of turnkey projects, in terms of hybrid projects, or in terms of limited scope supplies as well. Naturally, when it comes down to plain equipment supply, it's fairly easy. And I think what we're also doing at Inox Wind is we are spreading ourselves now across turnkey and equipment supply. In fact, the current order, 99 megawatts is turnkey and 180 megawatts odd is very limited scope. So it's plain equipment supply with very limited scope services. With respect to how the industry copes up, I'll specifically talk about Inox. I think we are gearing up for gigawatt scale execution. Within Inox, we carry almost 5 gigawatts of project site inventory, more than almost 1800 megawatts of transmission lines within the system already built. We keep adding to it. So we've got mass across the country. We keep adding to our connectivity, our land bank. I mean, we understand how infrastructure moves in this country. We've been doing this in wind for the past 12 years. We're probably one of the only select one or two players who offers turnkey in the market today. And obviously the government is targeting 8 to 10 gigawatts by FY 26. And God willing, I think we should get there. Having said that, I think we are geared for a 50-50 mix where we do about a gigawatt of turnkey and hopefully a gigawatt of equipment supply if that kind of market size was to exist. I am not sure about everybody else in the market because turnkey is, as I said, just down to one or two players in the Indian market. You've got some smaller, standalone EPC contractors trying to get into the space, but some people may be strong in one state or so politically and so on and so forth. But I think it is a complex business to be in. Unlike solar, which is very, very straightforward and a lot of people can do the basic EPC. Wind is complex. It is challenging. So early days, but let's see. God willing, we'll ramp up further if required. But let's see how the sector moves over the next 12 to 15 months.
Okay, just one clarity, Devansh, and that is again where maybe and please correct me if I'm wrong, but did I hear you say that the market in earlier interactions that the market would be about 8 gigawatts by maybe circa 8 gigawatts by FY26, and you could be a 2 gigawatt player by FY26. Now, can you explain that, and would it be a split between turnkey and execution? Just trying to understand if you did indeed say that, and if so, what is the nature of that guidance, or not guidance but estimate?
Look, it's not a guidance. I would just say it's as simple as the fact that we've historically been 15 to 20% of the Indian market. I think today we have the highest promoter holding. We have one of the strongest balance, probably the only A-rated wind OEM in the country. And I think we are the lowest cost producers of wind turbines, as I understand. Now, within that, obviously, if the Indian market was to become an 8 to 10 gigawatt play, you do juxtapose 15 to 20% onto that. That would take you anywhere from, say, 1,500 to 2,000 megawatts. I mean, obviously now if someone says the Indian market becomes 20 gigawatts, then actually we would become a 3 to 4 gigawatt player. Yeah. So it's not a guidance, but it's broadly depending on how the market plays out. I think we should be ballpark those numbers.
Okay, but just a clarification. Sorry, please finish your point.
And we are looking at 50-50. I mean, from a company perspective, we want to do 50% turnkey and say 50% equipment supply.
Okay, so when you say, hypothetically, if all that happens and more, Devansh, God willing, as you say, you move from execution or equipment supply of 500 megawatts in FY24 to nearly 1 gigawatts by FY26. Is that the way to look at it? Please correct me if I'm wrong.
Possibly much larger. If the market is 8 to 10 gigawatts, I think it's going to be much larger than 1 gigawatt.
Okay, fair call. Now, just some other numbers about how is the working capital cycle behaving currently? Because you guys have gone through a lot of pain. Does that tell you to shy away from doing things, or is it the time to be bold? And what about free cash flow generation? How do you sense that in a sector which you yourself say is a very difficult sector?
No, look, I think, yes, we have gone through hell and we've come out very, very strongly.
Yes.
And I'm very, proud or humble to say the fact that we're probably the only player which has not gone through any haircuts or any restructuring whatsoever to any creditor or any banker. I mean, the promoters backed the company. We put in our money when we had to put in. I think, God willing, we've come out very strongly. Having said that, I think, what we are guiding for is about 90 odd days of working capital, net working capital. And I think we've got a significant amount of working capital already in the system. We've also said publicly that we should be net debt free. And I said this in June, over the next 12 to 15 months. We've already raised almost 1,300 odd crores of debt. As of 30th September, our net debt was about 1,200. And after that, we've raised about 800 odd crores. So I think we're very, very close to being virtually net debt free in the next quarter or so. As we are moving forward and as our 3 megawatt supplies increase in the market, I think we're looking at only free cash flows. So there is no question of debt. We are a debt-averse group. We've historically been a very, very debt-averse group.
Yes.
We don't like debt whatsoever. And I think all our companies are, standing on their feet today with virtually zero debt. I think at the group level, our net debt to equity is probably 0.1%. So I don't think that is a context anymore in our group. Yes, we are being very aggressive in ramping up, capturing the growth, but again, without any debt in the system.
Got it. Well, the confidence is showing. I was going to ask you about Outlook 2024 when I first placed the request for this conversation, but I think that you've already laid out very beautifully for us. If I've missed out on asking you anything specific, Devansh, please do let us know. That's something that investors should look forward to when it comes to calendar year 24 or FY25. And then I would, of course, have a question on the merger. But before that, anything that we missed out talking on, which is a standout piece that people should watch out for?
Look, I think it's been a very busy year for us, raising capital twice from the market. Obviously, we listed Inox Green. We're happy to say Inox Green is scaling up, is turned. The shareholders are hopefully making money off that. It was a very, very tough IPO when we did that. That's another company which I think should see exponential growth as we move forward. I think just a lot of the estimates out there, if you put those numbers together, that's about 2 gigawatts. And I think if we're doing much more than that, given I think the market is seeming much stronger, we guided for Inox Green to get to about 6 gigawatts by FY26. We were currently at about 3.2 gigs. So I think, and that's just organically. So I think hopefully that company also should double in size. It's a lovely annuity business to be in. I think that's doing phenomenally well. I think, obviously from an investor's perspective, I think debt has gone down. So obviously interest costs should be going down, have gone down in Q3. And I think as we move into Q4, we are targeting Q4, Q1, hopefully being net debt free. So I think that's something which is internally, I mean, while I did mention debt is not a big concern anymore, but that is something which we are working towards. And I think our journey has just started, frankly speaking. I think the numbers should get healthier and healthier. I have gone on record to say in this financial year, every quarter should be better than the previous quarter. Q1 was EBITDA positive. Q2 was cash back positive. Q3 and Q4 are coming up. Yeah. So hopefully it should be better than the previous quarters. But that's broadly, where we are.
You extend that argument to FY25 quarters as well, Devansh?
Certainly.
You would. Okay, last question, just for bookkeeping sake. When does the merger get completed, Inox Wind Energy?
Look, I think that's not in our control. I think we've got all the banking approvals. We've got all the approvals in place now. We are waiting the stock exchange approvals. I think the stock exchanges are, it's expected at any point in time, as I understand from our bankers and advisors. And I think as soon as we get that, we'll file the scheme at NCLT, and then I believe it should be a 3 to 4 month process. But yeah, I mean, there's nothing really pending at our end. There's no operational impact, but administratively, there's limited we can do. As soon as we get the approval from the stock exchanges, we are good to go.
Okay. Well, Devansh, congratulations on this large order win, and all the best with all the executions and more order wins and more announcements, and look forward to talking to you post the quarterly numbers.
Thank you. Thank you so much. It was a pleasure chatting with you.
The pleasure was entirely ours. Viewers, thanks for tuning in.